All right, guys. So in this video, we're gonna get straight to it. I make it very concise, straight to the point. Okay. What you're looking at is gold. I was able to catch a $20 move. I tweeted about this before it took place. So let's get right into it. All right. So you can see right here where I said gold and silver can potentially run back to all-time highs. A little typo here. From here, silver's current price was at $32, and then gold's current price is at 2897, 2,897. Just at 1:32 a.m. All right. So I tweeted that there on my Twitter. If you're not following me on Twitter, go ahead and follow. Let's kind of make this a little bigger. You can kind of see it here. I guess I double posted this. I don't know why it's like this, but yeah, you can kind of see it here. All right. So I tweeted about this again, and we're able to catch a $20 move. Now let's talk about what happens. We're gonna break this down. I'm gonna show you guys the clip. I actually recorded the whole trade. Okay. So first of all, what you're looking at is a weekly chart. What you have to understand is that gold is still in an uptrend. We have to understand that fundamentally, all the stuff going on with Trump and the tariffs have led to the markets running to a safe haven. That safe haven has been gold. We've seen gold taking off higher for the past. I mean, this is the weekly chart, so you can. It's been moving higher to keep it short. So what price did so far? Right, it drove lower. This was on in February 24th into this weekly level. And look how we just rejected, right? Both of these candles here even open and close right at the weekly fair value gap low. And then we've rejected. So I'm still bullish, expecting prices to continue going higher. So it's the weekly chart, right? It's showing momentum higher, no change in direction. So we're bullish from a high time frame level. Going to the daily chart, okay? What did the daily chart do? I know I've lost off my chart right now, so I'm gonna hide this again. Daily chart ran a little bit lower, hitting this last down close candle, which can act as an order block, right? This is the last down close candle that we saw. And mind you, what does candle do here? It already took out a liquidity pool right here. There's a low right here. It drove in there, took that out, trading to the fair value gap at the same time. And since rejected, price consolidates. Today, it dropped lower into this daily order block, and we've seen that push. Now, I said price is going to go to all-time highs from here. We still haven't seen that yet, but we did catch a nice $20 move. I do think we can still push higher to all-time highs again. But for the context of this video, this specific day dropped lower first into this daily level. And then we see price reject. Okay. Let's go on that 4-hour chart. And here we're going to add some coloring here, right? So go on that 4-hour chart. What do we have? So I'm delineating right now with these orange lines the week. This was the week of March 2nd to, you can call it March 9th, right? This is all the price action delineated here. What did markets do? It just consolidated here heavily in this fair value gap, 4-hour fair value gap, right? See? So as you get into the week, this week, price drops lower, taking out those that, maybe saw this as a potential support and resistance level. It ran out liquidity, took out the lows. Now, a lot of people might think, even especially the fact that it's fair value gap, right, got ran through here, people might think we're going to keep going lower. But again, with all the context that shit, we're still moving higher. All this did was just run out liquidity pool on the 4-hour chart. Now, we go to the 1-hour chart. Now, if we're going to the 1-hour chart, there's two levels I was watching going into this week. This fair value gap here, because price was being supported, as you can see. And then eventually, we do get a run aggressively below that. But then when we do that, look what happens. We just stagnate there. So we run out this liquidity pool right here. And then we consolidate. That tells me they're just chalking up orders, just accumulating more orders, more orders. And on top of this, they stop right at another fair value gap if you look over here. And then we had this line here where you see here is SMT, meaning silver, on the other hand, made a lower low on this specific low. Gold did not. So that's what gave me the thought process that, yeah, we're likely going to push higher since we have the SMT taking place. Then what do we get? We get an aggressive push higher with a fair value gap here. Price drops lower in here. I was interested. This is where I took my first buys. Then price takes off, drops lower into what? Order block. Last down close candle. Price drops right into that. And makes its way higher and higher. And then we hit a level that's shaded in orange. That level is on the lower time frame. We're going to get into that. But just think about it. We started the week. This is like a Judah swing. We started the week going aggressively lower. Understand, as it was going lower, dollar's going lower. The whole market's going lower. And I'm like, it doesn't make sense. Something has to decouple here. End of the day, it's one thing if dollar's going higher than and gold's going lower, then that would be a sign. But the fact that dollar's going lower or really being stagnant, and then gold also pushing lower, that doesn't make sense. Fundamentally, it should be if dollar's going lower, gold should be going higher. They should have an opposite effect. And especially if we know that we're fundamentally bullish on gold. There's all the stuff I mentioned with tariffs. So just watch this move higher. I had an idea it was going to be a false move. Confirmed it by this consolidation we see here. Consolidation and an aggressive push away higher. Right? Drop right back into what? This shaded area here in yellow, which is a previously, so you call this a reclaimed fair value gap. Because remember, this level supported price previously. So we drop back into that. We trade above it, first of all. Drop back into that. That's a nice entry. Push away again. Order block right here. Right? For another push aggressively higher to take out what? These highs, and into this shaded area here. So let's look into that a little bit more. On the 15-minute chart, okay? Again, SMT here. This low here compared to silver ran lower. So price again pushes higher, drops here, pushes higher. And if you look at it like this, right, you can kind of see that market maker model where it's a huge consolidation here, which means a lot of orders are going to rest above these highs. Price drops lower, pushes higher, drops into this level here. I'm going to show you what a shaded level is in a second. And then we push higher again into this fair value gap. And you see me when I show you the recording, I put a buy limit. I already got in down here. Then I put a buy limit up here as well because I knew this 1 hour order block plus. Now it's a 15-minute shaded fair value gap. And I knew we're likely to go higher. Where are we targeting? These highs here. These highs here. And what do we have right here? A nice 15-minute fair value gap. And that's exactly where price goes to then stalls out. I still think we're going to keep pushing higher. But that was the trade I took there. Let's go on the 5-minute chart. What did we see on the 5-minute chart? So this shaded area right here, that's kind of different from the yellow, is shaded in blue. But look at why was that important? This was the last level where they had bought and then sold off. So the way I look at it is like wherever they sold, in a market maker model, wherever they previously, let's just say, sold, I expect buying to take place. So when we finally traded above there, and if you look how tight we are in here, right? Because trading is like a paintbrush. You want to see a lot of back and forth happening. You want to see every place, every price being covered. If you look very close on the 5-minute chart, you see all this back and forth price action, back and forth price action, back and forth price action. So in my mind, this little area here, it's all balanced. We don't need price to come back there, right? I'm just shading that for you. This whole area in here, there's so much back and forth taking place there. That's all balanced. So I don't need to see price drop back all the way in there. And then to the left of this, we have a previous level of price previously what sold off from. So it makes sense that when we came back in here, I decided to be a buyer. And I have my stop loss below here. As price traded higher, it drops into this fair value gap, and then we make our way higher. So this was a nice trade. And we're talking about a move from here all the way up here. About a what, $26 move. Nice, solid setup. I'm going to show you guys a video in just a second here. Again, if this was helpful, watch. I mean, you already watch if you're here. Like, subscribe, man. I would highly appreciate it. I have way more coming. I have so much more coming. I have some exciting news I'm going to be announcing shortly. So follow the page, subscribe, share with a friend. But this was a very simple, straightforward trade. And I hope you enjoy the actual recording of the trade. Catch you on the next one.